Need motivation?
Watch a top 10 with Believe Nation.
Think about if I told you to go play a game and I said, but I'm not going to tell you the rules, right? Be pretty hard to play the game at first, at least. Maybe you figure it out, maybe you don't, but you're obviously going to be much better equipped to play the game if I explain to you how the game works and what the rules are. And so if you think of money or finances as a game, there's really one key rule that everyone has to understand, which is the dollars will be worth less in purchasing power terms over a long period of time. That's not a negative towards the dollar. That's not a positive towards the dollar. It's just that is a fact.
And we call it inflation.
Yeah, and the system is built that way. And the economic argument for why it is built that way is because if I know that my dollars are going to lose purchasing power, meaning that today it costs me $2 to buy a loaf of bread, in 5 years it'll cost me $4 to buy a loaf of bread, I'm financially incentivized to either invest the money or to spend the money. But holding it is a losing proposition. Now, that economic theory is predicated on the fact that everyone knows the dollars are going to lose value, because what ends up happening is those 45% of Americans end up not investing the money or really spending the money. They're trying to save the money, but it is losing value. And I always go back, and I think this generational idea is really can be extrapolated even further. It's not just folks on the inner city. If you think back, I'm 33, you're in your 40s. If we go to our parents or our grandparents, for the most part, their financial advice was save, right? Spend less than you make. If you save, then you can make your way to financial security. That was actually true, specifically around our grandparents' generation, a little bit for our parents, and then for us, not so much. And so the advice that was passed down was actually predicated on a situation that no longer exists, because before 1971, there was nowhere near the debasement of the currency that there is today.
Because it was tied to gold?
That's a huge piece of it for sure, right? Which is basically the fact that when we handed over the power to print currencies, right? This is a 50-year experiment that we're in. And, again, there are some very positive impacts of being able to print currency, right? You essentially are able to devalue the currency. You can pay off future debt with kind of less valuable dollars.
Rule number 2, get in the game.
I was sitting here just thinking about it. It's pretty crazy. Ray Dalio, Steve Cohen, Stanley Druckenmiller, now George Soros, a bunch of the most well-respected folks, Howard Marks, all of them, they're all in the game. If you're a multi-billionaire on Wall Street and you got cash, you're buying Bitcoin. Why? We can't print trillions of dollars and expect the dollar to remain stable. There's going to be higher levels of inflation, of course. Over 5% CPI, over 4% core inflation. That's why you're seeing all these multi-billionaire, very well-respected hedge fund managers and asset allocators buying Bitcoin. They're all in the game. And so whether it was Paul Tudor Jones and Stanley Druckenmiller last year, or it's the Steve Cohens and the Howard Marks, and now the George Soros is all jumping in. That's what they do. They move their assets around tactically, trying to figure out where they should be positioned for movements in asset prices. And of course, they're all concluding what many Bitcoiners have concluded years and years ago, which is Bitcoin is the apex predator in markets. And if you're going to have the quantitative easing and the monetary and fiscal stimulus that's occurring in the market, of course, a fixed supply, open, decentralized monetary network is going to end up being incredibly valuable. That is what we're watching play out. So don't allow all of the bankers, the hedge funds, and the legacy world folks to buy up all the Bitcoin, because I'm not selling mine. I don't want to sell it to them. We'll see what's happening. 85% of all Bitcoin in circulation right now has not moved in the last 90 days. Pretty incredible to see. We'll keep watching, keep paying attention, make sure that when these guys all come in the market, we can see it right on chain. We can see the whales buying. There's now competition. Is the legacy world going to hold more Bitcoin, or are the Bitcoin and crypto natives going to end up holding more Bitcoin? Time will tell. I like the chances of the Bitcoin and the crypto natives. They already got a big head start. These guys got a lot of cash coming from Wall Street, but it's unlikely that they'll be able to catch up to all those crypto and Bitcoin natives.
Rule number 3, look for great returns.
I own a little over 10%, which is not a lot in terms of when you own like what, 95% of your net worth in the damn thing?
Yeah.
I mean, so when I asked the question about the unknown, and your mind could go a zillion different directions. It just, how do you get the confidence to go from 10% to 95%?
Your 10% is in the new digital financial system.
Yep.
You're 90% in the legacy financial system. I think of the risk spectrum in, let's call it the crypto industry. On the far left, you have the least risky asset, Bitcoin. It is kind of the blue chip, largest, most decentralized, longest track record, et cetera.
1,000%.
In crypto, least risky, most conservative asset. On the other end of the spectrum, you have crazy things that people are coming up with, all kinds of tokens and schemes and innovations and experiments and whatever that you can go buy for a penny, right? So you have on one end, super conservative. On the other end, you have super risky. When you look at the crypto industry, what most people are doing is they come into the industry and the people who end up going way out on the risk curve, they literally say, oh yeah, of course Bitcoin's gonna work, but I want better returns than Bitcoin. They're chasing something that is higher or better performing than Bitcoin alone. And so what I think about is the reason why Bitcoin is so attractive is I actually don't need to have the best returning asset. I don't need to be greedy. I want the thing that has a great economic return, but also I know it's going to be around in 50 years.
So let me ask you, do you
Rule number 4, follow the talent.
The short story is when I got out of the military, I came back from Iraq, I went back to school and finished. It was really important from my father's perspective. I was the first person in my family to graduate from college. And so that was kind of a big thing in his mind. And, in hindsight, was a great decision. Then I started a couple of businesses. And frankly, I knew nothing about starting businesses, made every mistake. I could write a book about everything not to do, but ended up being all right. And eventually went and worked at Facebook, ran some product and growth teams there. And then started investing in early stage technology once I left Facebook. And the key piece to investing is just somebody told me early on, follow the talent, right? If smart people are all going to work on something, go start paying attention, go start learning about it. And it just became very clear that there was a ton of intellectual capital flowing towards cryptocurrency and the entire industry. And so I got my start actually building mining facilities, actually using the computational power to mine Bitcoin or Ether, and then kind of fell down the rabbit hole.
Also, to make sure you're actually taking action after watching this video, I've designed a special free worksheet just for this video. The worksheet will highlight all of the lessons learned in this video, as well as pull out our 3 favorite learnings and quotes that will inspire you to actually do something. The worksheet will also give you space to write down what your key takeaways are and your specific plan of action to make sure you're getting results. If you want the worksheet designed specifically for this video, absolutely for free, there's a link in the description below. Go click on it and start building the momentum in your life and your business. I'll see you there.
Rule number 5, embrace digital assets.
Bitcoin is simply a open, decentralized digital protocol, very similar to what the internet is. And so the perspective that Mike has of as other countries leverage this open, digital, decentralized protocol for their gain, we therefore should, as the United States, ban ownership, prevent usage, etc. If that worldview was to prevail when the internet came around, we would essentially be living in prehistoric times. We would be North Korea, because that is what North Korea has done to their citizens. Is they have said, you are not allowed to use this open, digital, decentralized protocol called the internet. Instead, the United States, thankfully, was innovative. It was forward-thinking, and it believed in capitalism and democracy. And it said, if any country is going to benefit from an open, digital, decentralized protocol, we are going to make sure that we are the leader. We're going to use this to further our leadership position on a global scale. And so while Mike, I think, has this belief that other countries are benefiting from an open, digital, decentralized protocol, he's not wrong. But the reaction or the end result of that should not be, we therefore are going to opt out, because that will not stop these other countries from using that open, digital, decentralized protocol. You cannot shut this down. And so instead, what we should do is we should embrace it, and we should ensure that the United States stays the leader on a global scale. And so what we've seen in other countries is when their leadership has decided to ban the participation in that open, digital, decentralized protocol, adoption has actually gone up among the citizens. And I think that it's a very, very misleading argument to make around criminal activity to say that 40% of transactions are for criminal activity, right? The beauty of this is while we can sit and we can guess what are the US dollar transactions, right? The difference is Mike cannot tell us how many dollars are in circulation. Mike cannot tell us and prove to us how much gold is in circulation. But I can prove to you on the blockchain exactly how many Bitcoin there are. I can prove to you and show you exactly how many Bitcoin are in circulation. And I can prove to you and show you every single transaction that has occurred since January 3rd, 2009. Mike cannot do that for gold, and he cannot do that for dollars. And so the whole argument of 95% of transactions are illegitimate or fake, he's talking about the exchange traded volume. What he is not talking about is the actual transactions on the blockchain, because you can prove it. And that is the divergence of our worldviews, right? Many of the issues, I believe, in the legacy financial world and the macro system, Mike and I probably actually agree on. And I actually think we agree on many of the solutions from the sense of he holds gold and I hold Bitcoin. Those two things are very similar. They're both sound money principled assets. He chooses the analog version or the analog application of those sound money principles. I choose the digital application of those sound money principles. And so I think that what we end up seeing here, and the kind of great equalizer in this conversation, is that the world that is outside of this new digital decentralized world is a narrative-based world. Mike will throw a lot of data at the wall. Mike will tell a lot of stories, but he cannot prove the transactions. How much money is laundered in the legacy system? There's estimates that over $2 trillion is laundered. The global money supply would put that at a higher percentage than what is estimated to be the illicit transactions in the Bitcoin system. The difference is I can prove, I can show every single transaction. He can't do that for dollars. And so the narrative-based world is going to be disrupted and is actively being disrupted by this digital world where provability and auditability is at the core of it. And if you cannot prove something, then the narrative doesn't resonate anymore.
Rule number 6, do good.
Business is business, right? And so when I was at Facebook, we built a number of really, really great products. First was working on the growth team for Facebook pages, and we were basically helping small, medium-sized businesses use the platform. And then before I left, I had the great opportunity to help on some products that many people use today. So one is the Amber Alert product, where basically when a kidnapped child, the alert goes out basically in your news feed, you'll get a notification saying, hey, be on the lookout, call number, and then voter registration. And voter registration was really interesting because Facebook doesn't care which side you vote, right, with that product. They just want more people registered to vote. And so when we launched it, if I remember correctly, I think it was in the UK, it was responsible for like a double-digit percentage of voter registration. And so it's just cool to see kind of these platforms and just how much reach they have and their ability to really drive folks to kind of do things that are good for society.
Rule number 7, protect your purchasing power.
Today, everyone woke up and Bitcoin is back over $50,000. It means that Bitcoin is now closer to $100,000 than it is to zero. If we go ahead and we look, we've got a ton of data around why Bitcoin is such an incredible asset. It is the apex predator of financial markets. First, we can see today that Bitcoin over $50,000, up a little over 4%. Every single other asset that you can consider is basically non-volatile in comparison. Volatility is not good or bad. If you are holding an asset and it is volatile to the upside, that is a good thing. If you are holding an asset and it's volatile to the downside, that's a bad thing. So volatility on its own is not good or bad. It depends on how you are positioned in the market. And so these other assets have a lack of volatility. You can see oil up 1.77%. You can see gold up similar. You can also see that things like the euro and the yen barely moving at all. Bitcoin happens to move much, much more. And so therefore, over long periods of time, if it appreciates, that volatility works in your favor. If we then go ahead and we look at specific stats around the Bitcoin network itself, today we sit just under $950 billion in market cap. Bitcoin was launched January 3rd, 2009, and in about 12 years, we have gone all the way up to $950 billion market cap. It's pretty impressive. Right now, the inflation rate is 1.78%. The US dollar inflation rate on a CPI basis is over 5%. The core inflation rate is over 4%. And so Bitcoin's inflation rate is much, much more attractive than the legacy system. About 89.6% of all Bitcoin has already been issued of the 21 million total. In the last 24 hours, there's $18 billion of Bitcoin that was settled on the blockchain. This is not exchange traded volume, simply on the blockchain in the blocks of transactions, there was $18 billion. There's been about 7 days total of over $20 billion of settlement that's ever occurred on the Bitcoin blockchain. So very, very high rate of settlement happening right now. You also can see there's about $7 billion of exchange traded volume. This is going on to places like Coinbase, Gemini, BlockFi, etc., and actually buying and selling Bitcoin. There's over 1 million active addresses in the last 24 hours. So whenever somebody says nobody uses Bitcoin, well, there was 1 million people, 1 million addresses that used it yesterday. On top of that, the Bitcoin miners yesterday were paid almost $46 million as part of the mining reward. Miners get paid through two specific ways. The first revenue stream, which makes up the majority of their revenue, is through the mining reward. That is the 900 Bitcoin that came into circulation yesterday. On top of that, they also get transaction fees. Transaction fees are a small percentage of the revenue today, but the thought process is over time, those will grow to become larger and larger. But yesterday, in the last 24 hours, Bitcoin miners made almost $46 million in top line revenue. And then we can see that Bitcoin is up 72% from the cycle low, and it's still trading at 22% below the all-time high. And if we go and we look over the last 1, 3, 5, and 10 years, what we can see is that Bitcoin has continued to appreciate very rapidly. It has outperformed gold and the S&P. Gold is down 8% over the last year. Gold is down 1% over the last 9 years. Bitcoin's performance is unlike anything that has ever happened in financial markets before. It is very, very special. If we start to look at the Bitcoin price closing history by various levels, we can see that Bitcoin over the last year or so has only traded above the current level 73 days in the history of Bitcoin. So if you bought Bitcoin 88.4% of days of Bitcoin's life, you have more purchasing power today than you did before. So again, 98%. If you bought Bitcoin 98% of days since Bitcoin was created, you have more purchasing power today than you ever have before. And that's 73 days above current price levels is all in this year. So anyone who has been a long-term holder of Bitcoin has been able to protect their purchasing power and actually increase it, rather than if you hold legacy assets, you actually have seen a depreciation or a devaluation of that purchasing power. If you go all the way back to $30,000 price level, we've only ever spent 275 days of the entire life cycle of Bitcoin, less than 6% of the time above 30,000. So we are in uncharted territory. But what it shows you is that if you are a long-term holder of this asset, historically, it has proven to be very, very effective.
Rule number 8, forget the critics.
Do you ever think about the unknown?
If you said to me right now, we'll do first the bear case for Bitcoin, then we'll talk about the bull case. The bear case for Bitcoin would be, it's a global store of value today. It's obvious that people have adopted this, grown into $1 trillion asset. But unlike what the Bitcoin proponents believe, Bitcoin won't cross over into becoming a currency, and therefore that will drastically hamper kind of the addressable market. The most it could grow to is gold, which is basically a store of value, isn't really used for, to go purchase things on a day-to-day basis. And therefore, yes, there may be more upside, but it's kind of a capped upside. The second one is eventually we're going to figure out who Satoshi is. And if we figure out who Satoshi is, that's going to be a bad person. And we're not going to want to know who it is. And like there's going to be negative impact. The next thing is nobody's using it for specific use cases like being able to actually do cross-border payments, all stuff. It's slow, it's expensive. It's got like all these like technical issues with it. And then there's an argument of the unknown of like the government's going to clamp down on it in the future.
Yeah, I don't think they can shut it down.
They're going to regulate it. They're going to tax it. They're going to shut it down. They're going to outlaw it. They're going to do all this type of stuff. If you take every single one of those things, none of them are a 0% chance. But what is the 2% on each of those?
And
Sure.
I'm not even talking about those. I'm just, maybe it's totally uneducated. It's just one thing that gives me a little bit of trepidation is I trust Elon Musk a lot. And you look at his conviction around Bitcoin versus Dorsey, and it makes you think, well, what are his thoughts on? I mean, I know he owns a lot, though, right?
From what I understand, it's a material part of his net worth, personally, on top of
so maybe
SpaceX. I think the best argument somebody could make, and what I think is the biggest risk to Bitcoin, it really pisses the critics off because it has nothing to do with anything external. There's still a development process. There is still a upgrade process to Bitcoin. And it's incredibly methodical. It's incredibly intentional. It's slow on purpose, lots of kind of filters and security checks, etc. But technically, there could be a bug in the code that's introduced.
Yeah, and so I guess
It's like shooting yourself in the foot, right?
Yeah, could that happen? Or I mean, anything.
I mean,
could happen,
literally,
right?
and the electricity in the world could shut off because a meteor hit the Earth.
Rule number 9, listen to smarter people.
When you were at Facebook, did you work directly with Mark or no? Were you working with them? I'm curious.
Yeah, so for a very short period of time, about, 6 weeks, 8 weeks, there was a team put together that really tried to help both Mark Zuckerberg and Sheryl Sandberg just better understand the platform, what was happening on their pages. You got to remember that in the dominant platforms before around social, how does the founder of the platform interact with people on the platform? So Tom from MySpace, everyone remembers, he friended everybody, right? So everyone was Tom's friend. And it kind of became this like cultural meme almost, right?
Became a meme. That's right. Yes.
Yeah. And so Facebook didn't do that. But really, how do you, as the founder of the platform, how do you talk to people? And so there was this team put together that basically tried to understand that. It was part of a larger effort just around measuring sentiment on Facebook and things like that. And so that was really my only experience working with Mark or Sheryl. And frankly, I was blown away. I had the opportunity as a young kid to sit in some meetings with them and to watch, a multi-billionaire who's built this amazing business that, was one of the most valuable technology companies in the world, literally in a meeting go from talking about the individual kind of strategy of a team or a product all the way down to in the middle of a presentation, start talking about the pixels and the design, and then go back to kind of the macro level, strategy stuff. Wow. It's just, it's absolutely incredible to watch in real time.
What was Sheryl's strength? If that was his, he can go technical and he can go more, general. What was Sheryl's strength?
Yeah, I think she's just a great operator, right? She really, really understands how to operate a business. She understood a lot of the revenue, right? All the things that I think people from the external say like, oh, this is what she's there to do. She's done a fantastic job with, and it's very obvious why when you get to sit and talk and listen to her talk. But the other piece of this too, I think, is somebody once told me, they were like, look, both of them have the advantage of they've got more context than most of the people in the meeting. Right? Zuck's the longest standing employee at Facebook. And so he was literally there when a lot of these design or product decisions were made. The people who else were in the room, most of them have moved on. Right. And so when you're talking to Mark, you can have all the ideas in the world. He literally just has an information advantage, right? He's been around. He knows why certain decisions were made. And so naturally, what you want to do is you want to just kind of learn from those people. And so I was like 25, maybe 26 years old when I got the opportunity to work alongside not only them, but also a number of the people who are still at Facebook in leadership positions. And I just try to soak it up. It's just like surround yourself with people who are smarter than you, more experienced, and frankly, just shut up and listen. And that was kind of my strategy.
And rule number 10, the last one before some very special bonus clips, is look for dominance.
We have this idea of comparing Bitcoin to the various indexes and assets. And what you can see in this chart here is comparing Bitcoin, gold, the S&P 500, NASDAQ, and treasuries. If you look at that ROI, of course, Bitcoin drastically outperforming. Bitcoin up about 365% or so in the last year. If you look at something like gold, it's down 8%. If you look at the stock, it's just over 25%. But what I'm most interested in this chart here is if you go to the CAGR, C-A-G-R, compound annual growth rate over the 10-year period, Bitcoin has grown at 155% compound annual growth rate. That means that every year, on average, over a 10-year period, it's gone up 155%. And so when you compound 155% growth every year for a decade, you get the best performing asset in the history of financial markets. If you compare that to something like the S&P 500 or NASDAQ, those are both down under 20 and under 15%. Even gold being down just at 0.6%. So Bitcoin's performance is incredibly dominant. That is why we call it the apex predator of financial markets. If you then look at the Sharpe ratio as well, very, very high Sharpe ratios over a 1 and a 5 year period. And when you think about a Sharpe ratio, that simply is saying if you put this asset into a portfolio, when you compound the return profile, when you compare the correlation levels and the Sharpe ratios, Bitcoin can do very special things for a portfolio, even if you only have a small allocation. And so we will continue to watch this because we think that Bitcoin is going to become one of the most important, if not the most important financial asset in the world. And it's important to remember that there is a ton of market participants and trillions of dollars that are all swirling around in the financial market trying to find a home. And Bitcoin is likely to continue to suck up a lot of that value. I've got cash, and then I still make some private investments as well. So in some crazy way, like if I invest in a company that then is using the Lightning Network, like it's not Bitcoin exposure, but you know,
it's pretty close.
It's definitely related. If you compare what I just talked about in the crypto world of like conservative on one end, super risky on the other end of the crypto industry, if you look at the regular financial world, like the legacy financial world, Bitcoin is the most risky asset you could buy, right? And then like maybe bonds or cash or something is on like the other end. And so the beauty of sitting in like that Bitcoin seat is that all of the crypto guys and girls who are like way out on the risk curve, they're like, this is like the most, like, what are you doing, right? Like that's not going to drive you great returns.
Yeah, they call you a boomer.
Yeah.
Yeah.
But the legacy finance world, like I go talk to, you know, big hedge funds, they're like, what are you doing? Like that is the craziest thing I've ever heard.
Yeah. Yeah.
That's actually probably where you want to be.
I agree.
Right? Like I know there's way crazier things that you could do in the world, but I also know that there's way safer things you could do in the world. So like,
but 95% is very respectable. You don't say that often, do you? I mean, I hear you say it once in a while.
Yeah, I mean, it sounds like a crazy number until you just say, no, I just denominate my life and my portfolio in Bitcoin. So it's no different than dollars, right? If you have 100%, most people, right, in dollars denominated bonds or dollar denominated assets, you essentially have 100% exposure to what I think of as the legacy financial world. And so if you ask me right now, gun to my head, which financial world has the most room to grow moving forward? Well, the legacy world is like, we've had it for, 100 plus years, right? Like it's been here. There's just not that much future growth to it versus we get this crazy stuff. And it's why like the stock market, everyone's freaking out over 2% drop, right? I mean, literally right now, Bitcoin could drop 5% and no one would even care. It's just like, yeah, of course it goes up and down, 3, 5, 10% a day.
If you want 10 more amazing rules from Michael Saylor, check out the video right there next to me. I think you'll love it. Continue to believe, and I'll see you there.
And the nature of money has been bifurcated, and now the medium of exchange portion of money is sitting in fiat currencies, and the store of value element of money